For more such videos, subscribe to our channel. Welcome to this AML KYC Interview Questions. Question number 1. When is induction training provided to employees? The answer is, induction training is provided to employees at the start of their employment. Induction training is a form of introduction for new starters in order to enable them to do their work in a new profession or job role within a business or establishment. Question number 2. What Banking Regulation Act, 1949 contains? The answer is, the Banking Regulation Act, 1949 contains AML Anti-Money Laundering and KYC Know Your Customer Guidelines. Provisions of Banking Regulation Act, 1949, Prohibition of Trading, Non-Banking Assets, Management, Minimum Capital and Reserves, Capital Structure, Payment of Commission, Brokerage, etc. Question number 3. What does CENTER stands for? The answer is, CENTER stands for Cash Transaction Report as per the Prevention of Money Laundering Act, 2002. Also referred to as Currency Transaction Report. Question number 4. What do you mean by money laundering? The answer is, money laundering is the process of concealing the source of money obtained by illicit means such as gambling, corruption, extortion, drug trafficking, human trafficking, etc. Money is moved around the financial system again and again in such a manner that its origin gets hidden. It is the process of making dirty money clean. Question number 5. Effective information gathering strategies enable building a solid information base about each customer. Identify the KYC element which best relates to the stated practice. The answer is, the best KYC element for stated practice is customer identification. It involves effective information gathering strategies that enable the building of a solid information base about each customer. Banks are required to clearly spell out the customer identification procedure to be carried out at different stages, that is, while establishing a banking relationship, carrying out a financial transaction, or when the bank has a doubt about the authenticity or veracity or the adequacy of the previously obtained customer identification data. Question number 6. What are the objectives of KYC? The answer is, the objectives of KYC is, to ensure appropriate customer identification. Monitor transactions of suspicious nature. Question number 7. What are the stages of money laundering? The answer is, the 3 stages of money laundering are, placement, integration, layering. Question number 8. Why is there a need to perform anti-money laundering checks? The answer is, anti-money laundering laws, regulations and procedures seek to deter all criminal activities, including illegal goods trading, corruption of public funds, tax evasions, market manipulation, and also methods used to cover up these crimes and the money made from these crimes. Question number 9. If you have dealt with my clients for many years, so will you still need to carry out customer due diligence? The answer is, we need to keep customer due diligence up to date for all the clients. We would require to have sufficient documentary ID details on the files, but if there has been any subsequent change to their circumstances or risk profile, we should update the customer due diligence. Question number 10. What is electronic verification? The answer is, in order to prevent fraud and money laundering, it is important to verify individuals carrying out financial transactions. In earlier times, documentary evidence was relied on to verify an individual. These may not always be available and they can also be easily forged or altered. Therefore, electronic verification provides extra security and reduces risk against money laundering and fraud. There are some advantages of electronic verification as: removes the need for the customer to be present, saves time and helps support customer relationship building. Question number 11. What is a KYC policy? The answer is, with reference to RBI guidelines issued by the all banks are required to formulate a KYC policy with the approval of their respective boards. The KYC policy consists of the following key elements: customer acceptance policy, customer identification procedures, monitoring of transactions, risk management. Question number 12. What do you understand by customer identification procedure? The answer is, customer identification refers to identifying the customer and verifying through reliable and independent documents, data, and information. In which case the banks would need to satisfy the competent authorities that due diligence was observed in accordance with the requirements of existing laws and regulations. Question number 13. Who is a customer? The answer is, If our main purpose here is the KYC policy, then a customer can be defined as someone who maintains his/her account or has a business relationship with the bank, or say the one on whose behalf the account is maintained, that is the beneficial owner. Beneficiaries of transactions conducted by professional intermediaries, such as chartered accountants, stockbrokers, solicitors, etc., as permitted under the law, and any person who has a connection with some financial transaction which can pose consequential reputational or other risks to the bank, like a wire transfer or issue of high-value demand draft as a single transaction. Question number 14. What are the rules regarding periodic updation of KYC? The answer is, periodic updation has to be carried out at least once every 2 years for high-risk customers, once in 8 years for medium-risk customers, and once in every 10 years for low-risk customers. This exercise would involve all the formalities for KYC normally taken at the time of opening the account. Question number 15. What is a customer acceptance policy? The answer is, the customer acceptance policy of the bank is an important document in determining the basis on which the bank enters into relationships with its customers. An inadequate customer acceptance policy or the inadequate implementation of the customer acceptance policy can expose the bank to serious compliance, legal and reputational risks. The bank will accept only those customers whose identity is established by conducting due diligence appropriate to the risk profile of the customer. Collecting sufficient relevant information about the customer is the most effective defense against the bank being used as the medium to launder the proceeds of crime or to finance terrorism. Question number 16. What if I do not provide the KYC documents at the time of periodic updation? The answer is, if you do not provide your KYC documents at the time of periodic updation, the bank has the option to close your account. Before closing the account, bank may impose partial freezing, after giving due notice. Later even credits also would not be allowed. Question number 17. What is ongoing customer due diligence means? The answer is, ongoing customer due diligence is regularly reviewing customer information and having systems to conduct account monitoring. This is required for all customers, including the existing as well as new customers. Question number 18. What do you know about the politically exposed persons, specially designated nationals, financial sanctions, and why do you need to check on them? The answer is, it is recommended by the Third European Money Laundering Directive to have a procedure to check PEPs, SDNs, and the HMT financial sanctions. Politically exposed person, someone who holds a prominent public position, or an individual linked to them. Specially designated national, on a list which specifies that U.S. citizens don't have the permission to conduct business with them. HM Treasury financial sanctions, on a list which specifies that individuals with whom it is prohibited to transfer or make funds available to. Question number 19. How is partial freezing imposed? The answer is, partial freezing is imposed in the following ways. Banks have to give due notice of 3 months initially to the customers before exercising the option of partial freezing. After that, a reminder for a further period of 3 months will be issued. Thereafter, the bank shall impose partial freezing by allowing all credits and disallowing all debits with the freedom to close the account. If the accounts are still KYC non-compliant after 6 months, bank shall disallow all debits and credits, classifying them inoperative. The account holder can revive accounts by submitting the KYC documents. Question number 20. If you collect passports and driving licenses, do you need to check anything else? The answer is, a wider range of information can be checked by the electronic verification, thus providing a more thorough knowledge of your client. KYC Know Your Customer. Besides, it can also enable you to check other datasets such as PEPs and sanctions lists, which are advisable and specified by the Third European Money Laundering Directive. As fraudulent documentation is on the rise, therefore, there is a need to refocus efforts on identifying them. In order to remove the risk of receiving potentially fraudulent documents, the electronic verification is designed, therefore you can have a greater level of confidence in their authenticity. Various checks are carried out on the documents to confirm as much as possible, thus reducing the risk of ID fraud. Question number 21. Can you spot any difference between small accounts and other accounts? The answer is, yes. There are certain limitations associated with small accounts, such as, at any point of time, the balance should not exceed 50,000 rupees, in such accounts in a year the total credits should not exceed 100,000 rupees. Also, the total withdrawal and transfers in a month should not exceed 10,000 rupees, while the biggest disadvantage over this type of account is that the foreign remittances cannot be credited to such accounts. Initially for a period of 12 months and thereafter such accounts remain operational. for a further period of 12 months if within 12 months of the opening of such account the holder of such an account provides evidence to the bank of having applied for any of the officially valid documents. Question number 22. What if I don't possess any of the officially valid documents to get a bank account, which isn't subjected to hold any limitations, as in the case of a small account? Would it be possible? The answer is, yes. By submitting a copy of any one of the valid documents as proof of identity, a normal account can be opened. There are several valid ID proofs that can be provided, such as an identity card with the respective person's photograph issued by the central or state government departments, public sector undertakings, statutory or regulatory authorities, scheduled commercial banks, and public financial institutions, or stamp paper or letter issued by a gazetted officer, with a duly attested photograph of the person,